So hi guys, my name is Siddhant and welcome back to a new video, and today is the second video of our series Finance for Entrepreneurs. So as I've already told you that I'm going to make this series called Finance for Entrepreneurs, in which I'm going to discuss one financial topic that is essential for any entrepreneur to know every week, right? So I'm going to make one video per week, and we have already made our first video. If you haven't checked it out, then you can go back to my channel, you can go into the playlists and you can check that out. So the first video was about balance sheet, right? So as I've already told you that there are three financial documents that each and every entrepreneur should know, which are basic yet very important ones. So the first one is balance sheet that we covered in the first video. The second one that we are going to discuss today is the profit and loss statement, P&L, and the third is the cash flow statement that we will discuss in the video next week, right? So for today, if you're not aware of what profit and loss statement is, or if you're just aware of those terms, profit and loss, and if you're not aware of how to create one for your business, maybe it is a small business or a startup or even a medium-sized business. So if you're not aware of how to create a profit and loss statement, then you should watch this video till the end. So along with explaining to you what is profit and loss, we will discuss what are the advantages of profit and loss. I will teach you step by step how to prepare a profit and loss statement, and also we will discuss it with an example right at the end of this video. So if you're new to this channel, then do hit the like button, do subscribe to the channel, and also don't forget to hit the bell icon to receive the latest notifications of my videos on time. So hi guys, so let's begin with the video. So what is profit and loss statement? So if you remember what I've already told you, then balance sheet, profit and loss statement, and the cash flow statement are three essential documents that you need to judge the financial health of your business, right? So these three documents will help you understand whether your business is profitable, whether it is sustainable, and whether your current business plan or strategy is working or not. So to begin with, what is a profit and loss statement? Profit and loss statement, also known as the statement of operations or income statement, is nothing but it is a financial document that gives you a summary of company's revenues, its expenses, and the resulting profit or loss over a given period of time for any business, right? There's one very common question that is often asked, that is, what is the difference between P&L, profit and loss statement, and cash flow statement, right? So just to explain to you briefly, P&L is nothing but it indicates the money that remains in your business after paying all of the expenses, right? So it is nothing but it shows you the profit or the bottom line of your business. And cash flow statement, it just indicates the money going in and out of the business, right? So that is just a brief difference. We will discuss more about cash flow statement in detail in the coming video next week, right? So as you have already understood that profit and loss has three main components. The first is the revenues, the second is the expenses, and the third one is the profit and loss, right? So just to tell you about the structure of how a P&L can be made. So the first is the revenues, the second is the COGS, the third can be general or administrative expenses, the fourth can be marketing or advertising expenses, so that is the expense, fifth can be technology or research or development expenses, sixth can be the interest expense, the interest or the taxes you pay, and seventh can be the net income, right? So you first get the gross profit, you deduct the expenses, you get your earnings before tax, and then you pay the tax, and then you get your net profit. So let's start by discussing what are the advantages of P&L, and then we will move on to step-by-step formation of a P&L, in which I'll tell you how you can create a P&L for your own business or startup, right? So speaking of the advantage, the first advantage that I've already told you is that P&L along with BS, that is balance sheet, and CF, that is cash flow statement, is the very critical document to determine the financial health of your business, right? So the first point is it is very important to determine how financially healthy or how financially sustainable your current business plan or your business is, right? Now the second point is that P&L not only helps you in introspecting your own business, but it is also a very essential document when it comes to raising external funds from investors, right? So when you go to investors to raise external money, the only thing that investors want to see is that is your business making any money? Is it in profitable stage or is it losing money, right? So at that stage, having a great and a clear P&L is very important to give confidence to external investors to invest money in our business, right? And the third thing is that it not only helps you to get money in form of external funding from investors, but if you want to get a business loan from a bank or an institution, then even those institutions ask you for a P&L of your business. So all these advantages are what you can do currently, presently, right? But there's a fourth advantage that will help you not only determine your present situation or improve the present situation, but also help in forecasting or predicting your future revenues, your future financial health, your future business stability, right? So how you can do is that you can have your future revenue predictions, you can have your future expenses, and then you can also figure out an approximate and estimate future P&L statement, right? So you can use it for future predictions as well, that if you have come up with a new revenue model, if you have come up with a new scheme, then what effect would it have on your business, on your money making model of your business in the future, right? So it will also help you understand whether this new scheme of yours or the current scheme of yours will end up ruining your business, or it will end up growing your business, right? So these are the 4 advantages that I feel a profit and loss statement has, and there are many more statements that you would not currently understand theoretically, but as you get into the business, it is very important for any entrepreneur or business owner to have his or her business financials very clear and transparent. Now you must be saying that, okay, we understand what is P&L, we knew what those terms meant, we know the advantages, you have repeated it so many times, just tell us how to make one for our business. So we'll go into step-by-step discussion of how you can create a P&L for your own business. So the first step, as I've told you, list the revenues, the revenue of your business, right? So it can be any source of income, whether you are selling products or you are selling services, it can be any source of income. It can be any source of income that is available for your business, right? So the first step is revenues. The second step is cost of goods sold, COGS. Now everyone, if he wants to create a sustainable and financially healthy business, should understand what cost of goods sold is, what is COGS. So suppose, for example, if you're selling any products, then you should know that at what price you have purchased them, right? So the price of your purchase, or if you're selling services, then what does it cost you to give those services? So it can be in the form of time, it can be in the form of the employee's salary. So you need to understand what is the cost of goods that you are selling to the customer, and unless and until you understand what is the cost of goods or the cost of services that you're selling to you will not be able to understand how to earn a healthy profit margin from that sale, right? Now the third step is calculating gross profit. Now gross profit can be calculated by subtracting COGS from revenues. So revenue minus COGS is gross profit. Moving on to the fourth step. The fourth step is nothing but calculating your operating expenses. So operating expenses can be in the form of rent, it can be in the form of payroll, it can be in the form of equipment, it can be in the form of the expenses of the utilities, it can be in the form of travel expenses, it can be in the form of postage expenses, it can be any cost that is related to the day-to-day functioning, day-to-day operations of your business. So step 4 is calculate your operating expenses. Now moving on to the fifth step, that is subtract operating expenses from gross profit to get operating profit or loss. We figured out what is the gross profit, we figured out what is the operating expenses. Subtracting operating expenses from gross profit will give you the operating profit or loss, right? So at this stage you understand that whether your unit economics is positive or negative in the business that you are doing. Now step number 6 is add any other sources of income that are not directly related to the sales of your business, but they are coming in the form of revenue to your business, right? So they can be in the form of interest incomes, they can be in the form of dividends that you're getting from your investments. So you need to add those as well in the step number 6, right? Now one important calculation that you need to do in step number 6 after figuring out your additional incomes is that you need to figure out your EBITDA. What is the EBITDA of your business? So EBITDA is nothing but earnings before interest, taxes, depreciation, amortization, right? So you need to figure out EBITDA. Now how will you figure out EBITDA? EBITDA is nothing but it is operating profit or loss plus interest income plus dividends income, right? So it is nothing but operating profit or loss plus the additional incomes of your business. That is nothing but EBITDA. So these are the earnings that your business earns before paying any taxes or interests, right? Now moving on to the 7th step, that is calculate your interests or the taxes that you need to pay, right? So in the seventh step, you will calculate all those expenses which are in the form of interests or taxes or amortization that is in the form of installments that you need to pay. Now moving on to the final step, step number 8, which is the final stage of your P&L, that is determining the net profit of your business. Now when you subtract all those expenses from EBITDA, that is the expenses in the form of interests, taxes, depreciation or amortization installments, when you deduct all those from EBITDA, you get your net profit. So this is the last step of a P&L. So at this stage, you understand whether your net is profit or your net is loss, right? So it can be either net profit if it's positive, or it can be a net loss if you're incurring any losses and if the result is a negative, right? So I hope you have understood how to create a P&L for your own business, and I'll also show you some of the examples in some time. So just to tell you that many softwares are used generally to create a P&L, like QuickBooks or FreshBooks or OneUp. But if you're just starting a new business, or if you're a small business owner, then instead of using these high-level softwares, you can do all those things in Microsoft Excel as well. So if you're well versed with MS Excel, then you can do all those calculations. You can just create a spreadsheet in MS Excel as well. For your convenience and for your help, I'll link down my Google Drive link in the description below, where you can find some examples of P&L, and also you will get a blank format which you can use to create your own P&L as well. So you can use that blank format, you can fill in your details for your business, and then you can create your own P&L, right? So let's move on to an example, right? So this example will just make it more clearer and easier for you to understand. So company B income statement, okay? So net sales, that is the revenue, they have given around 4.3 million. The cost of sales, that is the COGS, 2.7 million. You deduct, you get the gross profit, 1.6 million. Then the selling and operating expenses, general administrative expenses, you get the total operating expenses. You deduct those from the gross profit, you get operating income, that is 765,000. You have other income sources, then gain on financial instruments. You add those. Then you have losses, that is loss gain on foreign currency. You have expenses, that is the interest expense, you deduct those. You get EBITDA, that is income before taxes, right? 740,000. Then you have income tax expenses, because after earnings before tax, you need to pay the tax to get the earnings after tax. So you pay the income tax expense, and then you get your net income, that is around $483,000. So it is a very simple yet very fundamental, very important document that any entrepreneur should be able to understand and interpret. And I hope I have made it very easier for you to understand. So if you like the video, then do hit the like button, share it with your friends, comment your thoughts down below. And if you're new to this channel and if you haven't subscribed it yet, then do subscribe the channel, hit the bell icon to receive the latest notifications of my videos on time. So I'll see you in the next video. Till then, goodbye, take care, thank you.